The car market has been absolutely crazy for the past few years. I mean, car prices were so freaking high. Some cars even went for 20 to 30 grand over the sticker price. Then there was the used car market. However, the market bubble just popped. And that's good for you, as you'll learn at the end of this video. You see, used car values, which used to be really high, are dropping fast, especially electric vehicles that are now selling for 32% less than a year ago. On top of that, people who own cars are struggling to keep up with payments more than ever before. Hello, and welcome back to Tides of Wealth, where you're just one sale away from financial success. The struggling car market. Why is all this chaos happening? Well, buying a car has become way more expensive in the last few years. Not only was the sticker price high, but also around 80% of new cars were selling for more than the suggested price, which was pretty darn unusual. This was happening for a few key reasons. One big issue was the shortage of semiconductor chips. These little pieces of tech are super important because they control a lot of things in a car, from windows and sensors to navigation. Cars need more than 3,000 of these chips, but the car industry wasn't getting nearly as many of these chips as it needed. You see, a lot of these pieces of tech are going towards things like phones, smartwatches, and other tech products. Because there weren't enough chips for cars, fewer cars were being made, which meant there weren't enough to go around. That's why car prices stayed high for a while. I mean, it's simple economics, isn't it? The lower the supply, the higher the price. With delays in manufacturing cars, problems with shortage of employees, and issues with getting parts, there just weren't as many cars available. On top of that, greed also led to this bubble. Look, it's quite simple. Companies often prioritize what's best for their shareholders. Car makers have figured out that they can charge higher prices by making fewer cars. They're deliberately not making enough to meet the demand. For instance, BMW openly stated they'd continue making fewer cars to keep their prices high. So all of this created a bubble. However, just like any other bubble, it popped. And here's why. The interest rates. People could get loans to buy cars with very low interest and for long periods, sometimes for as long as 12 years. This made cars more affordable, but it also caused a lot of people to take out bigger loans. Of course, this led to a high demand, which led to the highest car payments ever, averaging around $753 every month. Car loans became the third largest type of debt, right after mortgages and student loans. But now, people are holding on to their cars for longer periods, just like homeowners stick with their houses due to low fixed-rate mortgages. A report from July 2023 pointed out that people are holding onto their cars for longer periods of time. This means there aren't as many used cars available for sale as there used to be. And I mean, this makes sense, doesn't it? If you're handling your current car payments well, why bother switching to a new car with new loan payments, taxes, and potential issues? It's easier to stick with the car you already own. EVs are hit hard too. According to Car Gurus, a site that keeps tabs on car values, prices have dropped by almost 1% in just a month. Tesla's prices, in particular, are a whopping 33% lower than last year. When Tesla slashed their prices, other electric car companies had to follow suit to stay competitive. On top of that, there are more used electric cars up for sale than new ones, which means the used car market is starting to draw buyers away from new cars. Not only that, but several automakers have scaled back their ambitious EV plans due to various reasons like slower customer demand, cost concerns, and supply chain issues. This includes pausing investments, delaying production launches, canceling partnerships, and facing profit margin pressures. The focus on producing larger EVs like trucks and SUVs has strained the supply chain due to the heavy demand for batteries. So while EVs showed promising growth, several challenges, ranging from price concerns to political divisions and supply chain strains, are currently influencing their widespread adoption and market stability. But it's not just electric cars that are facing price drops. You see, other types of cars are seeing declines too. Crossovers are down by 6.3%. hatchbacks by a surprising 9.1%, wagons by almost 10%, and vans are hit the hardest, dropping by more than 10%. Even though prices are still higher than before the pandemic, they're clearly going down now. This leads to big questions about how much more they might fall and whether the entire car industry could be in for a tough time. By the way, if you're enjoying everything so far, we would really appreciate it if you could subscribe to our channel for more videos like this. And let's not forget about car dealerships. Car dealerships often buy cars on credit, not cash. Right now, interest rates for these loans are the highest they've been in 20 years. So, every day a car sits unsold at a dealership, it's costing them more money. For instance, 2 years ago, keeping a pickup truck on the lot might have cost a dealership just $2 to $4 a day in interest. Now, it's more than $12 a day. This means dealerships are really keen to sell off the cars they have, and they might end up losing money if they wait too long. So they'll be lowering their prices just to get these cars out of the way. Now, let's talk about car loans. Normally, cars lose value pretty fast, but between 2020 and 2022, things were different. Due to high demand and low availability, banks were giving out loans for cars that were actually worth more, which means someone might have gotten a $50,000 loan for a car that made sense then, but now they owe more than what the car is worth. And with higher interest rates today, refinancing those loans isn't a great option. You see, now banks are worried that more people might not be able to pay back their loans as car values drop. They're being pickier about who they lend to and the conditions of the loans, and this is all because many people owe more on their cars than they're worth. So instead of struggling with payments they can't afford, some are letting the banks take back their cars. Right now, getting approved for auto loans is tough because rejections are at a 10-year high. In fact, some banks are even giving up on getting paid back for some loans because they think people won't repay them. Some experts have predicted that more people will start making late payments on their auto loans. On top of everything, for some younger people, car payments are even higher than rent, which is a big deal. But what does this mean for you? Car values are generally going down each year except for pickup trucks. Pickup trucks are actually getting more expensive by about 7%, which is a sign that people are holding on to these work vehicles so they might be worth more when resold. But the bubble hasn't yet fully popped. Used cars are still about 33% more expensive than they were before the pandemic. But then again, that's similar to how a lot of things are pricier these days, like real estate, groceries, and even stocks. Money in circulation has gone up by about 30%, which might be connected to these rising prices. Used car buyers are now getting cars that are much older than what they could get for the same price in 2019. These older cars also have a lot more miles on them, over 100,000. But sadly, this is just how things are on the market right now. But the good news? Prices could drop even more. A term you might hear more often now is "give my car back." As we mentioned earlier in the video, many car owners owe more than their cars are worth and can't keep up with the payments, so they're giving them back. Some call this situation the perfect storm. People got loans for pricey cars they couldn't afford, and now they're in trouble. In fact, loan delinquencies are the highest since 1994. Honestly, things might not get better for a while. Most cars aren't investments, they lose value. Financing something that loses value at high interest rates isn't a great idea. Now, you might draw parallels to the housing crash of 2008, but it's not exactly like the housing crisis. Because while people are struggling to make their car payments, a $700 payment is still easier to handle than a mortgage. Now, let's talk about what you should be doing. If you have a car you can't afford anymore and can't sell because you owe more than it's worth, talk to your bank. Maybe you can renegotiate your payments, and if you're selling your car, put a realistic price tag on it, take great pictures, and advertise it well online. But if you're in the market for a car, now is a good time to negotiate. The market is changing in favor of buyers, so try to get a good deal. But remember, cars aren't investments. Their value usually goes down, not up. The sooner we accept that cars usually lose money, the better we can handle situations like a dealership asking $100,000 for a Toyota RAV4. Well, that's it for today. Let us know in the comments below if you think the car market bubble is about to burst. See you soon.